How do you prepare for the upcoming recession, or are you prepared? Well, in this video, I am going to be talking about what is all the bullcrap happening with housing. Are we in a shortage? Is it going down in price? Where is it going in the future? Also, are we in a soft landing? I don't think so. I don't believe that there is such thing as a true soft landing, and usually there's always pain to be had. But there is two ways that you can really set yourself apart and set yourself up for success. And the one is really like maintaining what you have, like figure out how to keep what you have and be very lean and mean, right? That's the way we use it in the business terms. And then the second thing is my favorite, is like, how do we actually come out of a recession benefiting from it? How do we take advantage in a recession? Because that's how the rich get richer, and the poor that don't know how to take advantage of it, hey, they just get poorer. So let's get right into it. All right, let's talk about the first thing, and keeping what you have, meaning you guys all have created a bunch of stuff that you need, whether it's subscriptions, whether it's gym memberships, whether it's a car lease payment, whether it's rent, a mortgage. You have built your own shit. And it's always funny to me that I'll ask this question to many people in their 20s, even 30s, even 40s. They don't know what their number is. And what they're always asking me, what do you mean my number? And in the business world, we always call it the nut. And that means how much money do we need to make just to cover our bills, right? Like, so if we make $5,000 a month and we have $5,000 of bills, we have officially made the nut. And in the business terms, same way, we call it the nut. As long as our revenue matches our overhead, or in this case, personal living expenses, then we have broke even. The problem with that is that you never actually get ahead, or that many people, I don't even know what the percentage is, I should have looked that up, but I know that there's a significant amount of people that do not even know what their nut or their living expenses are and how much revenue they need to make. And what problem comes about that when times get tight? Well, if you've already been living on your income amount, with your living expenses, you're probably going into credit card debt, because you're probably likely, I know a lot of people that I've talked to are spending more than they actually make. And while this sets you up for disaster within a recession, because when finances get tight, well, guess what? Things are starting to get cut. And we call it the lean and mean factor in the business world. You start cutting the fat. You start cutting people that are not producing for the company, which we'll get into in a minute. But what is happening right now is that you're seeing all-time high credit card debt. I think we're $1.1 trillion of credit card debt. And now this is consumer credit card debt. And what else are you seeing? You're seeing savings accounts drop drastically in valuation. How much money was in people's savings? Remember, in 21, 22, people had maximum savings account. They had a big reserve fund, and then they just kept spending and spending at that same pace. And guess what happened? Now the savings accounts are at all time, getting towards a very low threshold, or all-time low, and we're getting credit cards at an all-time high. So who do you think is going to lose in that scenario? I think you could probably predict that anyone with super high credit card debt and super low savings right now, if hardship came or if you lost your job, you're probably going to see some pain. And if you own a bunch of real estate, or maybe you just own a house and you can't pay the bill, guess who's going to be taking that property over? Probably the bank. And while most people don't want to see a bank take over, banks don't want to own property. They're not in. They want to lend on the property and make money on the spread between the interest rate and what they can borrow at. They do not have any interest in owning real estate because, well, the person who bought it lost all their down payment or equity. And guess what? Now the bank is likely, you're seeing these loans much higher than the valuation of properties. This is also hurting different people. So if you lose your property, I'm kind of explaining the financial crisis right now, but I think we all need to be very cognizant of what happened in the financial crisis. And it's very much exactly what I'm explaining. But in the financial crisis, everyone's property, the debt was more than the property was worth. So what happens? We had this huge incline of people buying properties, and then guess what happened? Banks owned everything, and they're just fire selling this. Short sales, just trying to unload these properties. Well, as people were declining, or as people were losing their properties and investors were losing real estate, they're losing everything they had. Well, in that case, you would think, oh, well, in today's term, if that happened, hey, I'm just going to creatively finance or try to get out. Banks aren't willing to lend. And you're seeing that happen today. You're seeing banks tighten up, lower LTVs. You're seeing, meaning you have to bring more equity to the table to even borrow against. And oftentimes there's something called a debt coverage ratio. And so that's basically towards the amount of revenue a property can make, an investment property. Your debt can only be, you have to be 1.2 times be able to make the payment. So if you have $100,000 of NOI on a property, or the property produces $100,000 each year, your payment probably can't be any more worth than about $80,000. So you have about 20% spread between just making sure that the banks are in the safe range. That doesn't produce much cash on cash, hardly any to mention, because you have to borrow. You have to get so much equity in a deal in order to borrow or even buy the property. So that's why you're seeing real estate investments get tight. Again, this is what happened in the financial crisis. And as sellers are still have this expectation that they can get the money for their property in 21 and 22, now have to come to the realization that, hey, some of my equity is gone. And unfortunately, hopefully I don't have too much debt where the property can't even handle the debt load. I know in many cases, you're seeing this happen across the Sunbelt markets, where a lot of these syndicators have basically feed the deal in the beginning, and then now the property isn't producing what the pro forma, what they stated it was going to produce, because rents just didn't climb at the pace that they thought they were going to. Rents climbed, but they were climbing at a historically fast rate. And now guess what? Things are flat. And you know what? Things are not producing like they thought they were. So now they're in troubles with the banks. And so, what I tell everyone, and some of that education there in preparing for a recession is very important for everybody. But you don't want to take, maybe you are struggling in your times, or you don't want to take a financial relationship in jeopardy, right? Like, you want to keep your financial relationship very strong in times like these. Who do you need on your side when things are getting lean? You need lending. And if you want to keep lenders on your side, keep a lot of communication, be open about what's going on and how you're trying to mitigate the problem. You can be open about those things with your lender. They're willing to help you and maybe back you up in a tough time, like many people are right now. And when opportunities do arise, because you got to think, with all these properties that are maybe overvaluated right now, and there's more debt that is covered on the properties, there's going to be a lot of opportunities coming up. And the only ones with the strongest relationships for lending, those are your biggest partners in real estate, are going to be the ones being the victors through all this. And again, if you're not one of those because you're not taking care of your personal finances, you will not be one that can go and take advantage of it on the second hand, meaning taking advantage of a recession, where this is where the rich get really rich, in recessions. That's where they come out of these things flying colors ahead. And, you got to think of times like the financial crisis of 2008, when I live near the Canadian border in North Dakota, and I know that the Canadian dollar was dang near 1-to-1 for the US dollar. And usually it's, we're 30% more or quite a bit more. Even I know Canada's not doing well and we're, significantly more valued. But during the financial crisis, the dollar wasn't worth much. And guess what? Their dollar was worth 1-to-1. They came down here in flocks. We have local lumber yards. We're about an hour from the Canadian border, and there was flourishing with Canadians coming down here to buy things in groves, which helped stimulate our economy. And, being in North Dakota, it also helped that we had oil fields as well. So we had surging oil and Canadians coming down to buy everything in the state of North Dakota, which has, decently low tax rates. So that helped us through that time. But if the lenders were still tight, not necessarily in North Dakota, because we also have a Bank of North Dakota, which we have a few advantages here that other states don't have at all. And they were buying things in groves, and the Canadians were. And it was because they matched their dollar. Those Canadians also were down here buying real estate because they're like, wow, you can go to Arizona and buy these properties that were selling for $300,000 for 80 grand, 90 grand. And the very smart people out there in this world that were had investors in Canada had all the money. They were flourishing up in Canada. So they were taking Canada investor money and buying up all these deals within the Sunbelt markets that were hit so hard. And they, guess what? They came out in 2010, 11, multi-millionaires because they took advantage of the situation, but they figured out how to solve the problem. They knew that Canada had money. They figured out how to pull investors up there and say, hey, here are some super distressed assets that the banks own. They want you to, they want to get these properties offloaded as fast as possible, whether it's auction, any way. And the banks weren't willing to lend. So guess what? They had Canadian banks buying stuff. It was all these situations, but they figured out, these investors, who all probably lost most of what they had down here in the States. The Canadians ended up buying a lot of it and teaming up even with U.S. operators, and they took advantage. And by 2011 and 12, the course has already been written, and they had huge advantages in real estate. And these properties, some properties were cash flowing even if they were multifamily. So what I really want to get and have you understand is that you need to figure out how to provide a solution, right? Most of the solution wasn't within the U.S. It was to reach out to Canada. And maybe this time it's like Canada's not in a good spot either right now, and U.S. is entering a recession at some point. There's already pain and blood on the streets. It may not seem like it because the stock market's going crazy. Crypto's going crazy. I think a lot of people are pivoting into crypto and are going to bail on the stock market right now just because I think that the Fed really wants to get down to 2% inflation. So I'm not going to get into politics, but I know obviously we have a big, it is a voting year for the U.S. and we need we're going to have a new president at some point in November. So, but, I want you to think about your situation, maintaining what you have, meaning keeping your nut or your living expenses as low as possible and driving your income, having multiple sources of income for yourself. Think about this. And I want to put this I want you guys to comment below. If you had what is one of the best side hustles that you could do in 2024? I'm going to be creating a video on this. And I want to know from you guys, what is the best side hustle that you have done to make revenue? Maybe it could have been in 23, but maybe in the future in 24, what do you see being the best way to have another income source? Because if you're just relying on your one job, I don't believe that if you lose that one income source, you might be screwed in this time. Like, people aren't hiring as fast. They're not hiring for as much. As there is a shortage in workers, things have slowed down dramatically from where they were. And so I believe that a side hustle of some source or a secondary income, third source of income, you need to have these types of incomes built into your, into your revenue line, and then, having your expenses below, but figure out how to have another income source, some kind of designed route. As entrepreneurs, we do all sorts of different things, whether it's coaching, mentoring. We have all our businesses. Usually we have multiple businesses. I have several businesses myself. I have multiple real estate, over 20 different real estate properties. I do storage. I do multifamily. I have an office building that I'm sitting at. I have flex space industrial. I do multiple different things, and I gain lots of knowledge within each area. It's so funny that people just have one source of like how you create revenue and how you educate yourself. You know what? No, you need to figure out another source of revenue so that you can go and provide yourself or keep your family afloat in case that you do lose your job or something happens. So, again, comment below the best side hustles for 2024 that you believe that you've started and can inspire someone else. I think it'll help a lot here. So, but leading through all this, always know that a crisis leads to opportunity. Right now, there are going to be tough times, and there's going to be good companies that probably aren't there tomorrow. There will be great companies that are only going to be good this year. You're going to see revenue streams tighten. You're going to see, I always like to watch like the used car index, because as that thing plummets, you know that supply is getting here, right? Like, I think it always like is my indicator for the whole economy. If there's a bunch of cars, you call these car dealerships and they're just loaded with cars, you know that everyone is starting to get more frugal. They're keeping their car longer. They're trying to reduce their expenses. They understand that borrowing at 8-9% interest rates for a new vehicle or a used vehicle is their payment drastically changes. And as you see these car dealerships having all this inventory, it creates a lot of hardship, and it's a good indicator on how the economy's doing. Because I believe that this happened in the Sunbelt markets much quicker, and now you're seeing it up in the Midwest, and it'll be nationwide as things continue to tighten. So, but remember, the crisis right now that everyone is getting lean and mean, as we call it in the business world, is creating opportunity. And you need to start thinking about, how do I take advantage of those opportunities so that I can be one of those smart folks that come out of this thing in 2026, 2027, flying colors, right? Like, there's going to be a lot of pain within 24 and 25, I believe. I think that the future is bright, though. In the U.S. economy, it always has been bright. Things will get better as interest rates decline and the economy continues to go back into roll mode. So I want you to think about that. There's always an opportunity when there's a crisis. You just need to figure out the solutions. And if you want some more solutions on how I'm taking down real estate deals, you can watch some of my other videos. Like and subscribe. That helps me get this channel out there. I appreciate y'all, and I'll see you in the next one.